Welcome to the Power and Market Report. I'm Albert Liu. I'm joined once again by Rick Rule, the President and CEO of Sprott US Holdings. Rick, thank you for joining me once again on the Power and Market Report. How are you?
I'm fine, Albert. Thank you for having me. I enjoy these sessions.
It's a real pleasure, and this is the second time in about a month, and a podcaster could get really used to this, so I'll warn you to not make this a regular occurrence. Otherwise, I and the viewers will be looking forward to it, almost expecting it.
I enjoy the process, so feel free.
We had the job numbers come out this morning, and it was a disappointing number. And I know through our conversations in the past that you don't really emphasize this stuff. I've never heard you say, use as a justification for buying anything that U.S. jobs are going to miss forecasts. However, gold is up over 1.5% on the move, and you're probably not too eager to give that back. So what do you think about this move today in gold?
You know, we have a genius that works for us in Toronto named Paul Wong. He's our investment strategist. I'm always particularly impressed by people who are smart in ways I'm not. And he's a technical analyst. And for really as long as I've known him, which is since 2011, he's been a bear on gold. And I'd give him the gold narrative, and he'd say, you know, you're right with all that, and none of it matters. Markets go down because there's more sellers than buyers, and they go up because there's more buyers than sellers. And people use the narrative to justify what they're doing with their money. And this guy has been so right. Last September, he came on the call, our internal call, and he said, you know, the setup in gold is unlike anything I've seen technically for a long time. It's going much higher. And I said, is this Paul Wong, the same Paul Wong that's been negative on gold for 5 years? He said, yes, absolutely. He said, there's more buyers than sellers. The market today, Albert, I can't tell you why, has more buyers than sellers. The market's extremely well bid. I think that people, as Paul has said, use reasons in the market as justifications to explain their experience in the immediate past. Right now, in some way, gold is going up because gold is going up. And I think the jobs report is an interesting statistic, but it also seems to me that if the jobs report means that interest rates are going down, the bond market should be strong. Falling interest rates are good for people who hold existing bonds. But the truth is that the bond market is relatively weak while gold is going up. That leads me to think that statistics like the jobs report in the very near term are justifications for doing things that are on people's minds anyway.
Could be. Now, even though the bond market is not strong, Treasuries benefit as part of, I guess, the fear trade. Sometimes you see Treasuries trading with gold, sometimes against gold. What do you think about U.S. Treasuries right now?
Well, that's central to my thesis. I think the long-term, the most important long-term impact on the price of gold is the market for the U.S. 10-year Treasury, the anti-gold, or rather gold being the anti-Treasury. My own belief in the very long term is that we've been in a bond bull market since 1981. Very long bull market. The interest rate on the bellwether security, the U.S. 10-year Treasury, has fallen from 15% to 1.8%, an epic bull market. Can it fall much further? Well, some further, but the truth is, arithmetically, the bull market in the U.S. 10-year Treasury is much closer to the end than to the beginning. That means, from my point of view, that the bull market in gold is much closer to the beginning than the end. That doesn't mean that the gold market is going to go straight up or the bond market is going to go straight down. There's going to be backing and filling in both directions. But if you look arithmetically how much farther the bond market can go when the yield falls from 15 to 1.8, the answer is fairly limited.
Yeah, down to 1.75 this morning, Rick.
Okay.
With yields going negative on some sovereigns, does that change the way that you look at that boundary condition?
I'm sorry, could you re-ask the question? I didn't understand it.
Oh, sure. It's just there's an implicit assumption that zero is the boundary on a yield?
You know, could it go sub-zero? Of course. How sub-zero can it go before people stop giving them money? Of course, the Fed can buy its own paper, but the truth is that that frees up lots of private dollars to go into gold. So from the point of view of the gold trade, it can't go sub-zero and continue to be a competitor for gold. Yes, the Treasury market can go sub-zero if the government buys all of its own phony baloney paper. In other words, if we go to a 100% counterfeit system, that would be, of course, extraordinarily bullish for gold, because the Treasury would no longer be a competitor for gold, but would be exposed for the counterfeit paper that it really is.
That's a good point. It would no longer be the Treasury market, it would just be the Treasury. Just a meaningless number at that point.
The Treasury churn.
That's right. Rick, I enjoyed your appearance yesterday on RT, and I've heard you say this elsewhere, perhaps even on my show, that silver is the poor man's gold. A case could be made that gold stocks are the poor man's gold, because people who invested in gold stocks are poorer in many cases than people who invested in gold.
That's very funny. If what you're trying to say is in the last 5 years gold stocks have made people poor, I get the joke. The truth is that experience in past bull markets suggests that the bullion leads and gold leads silver, and the stocks follow, but the stocks go further. And I suspect that's true. So in the context of what you've just said, we experienced a nice little move in gold at the end of last year, and an extraordinary move in gold stocks this year. Now we're starting to see a bit of a move in silver relative to gold. And if these moves continue, which I expect they will, although perhaps not immediately, interestingly, by the way, the silver stocks participated with the gold stocks in the gold stock move, even before the silver began playing catch-up with gold in terms of the move of the commodity. It's been a very interesting market.
That is interesting. Gold miners up year-to-date, GDX 23%. That doesn't include whatever's been going on today while I'm on this call with you. So I want to talk about the mining shares. You know, it's interesting. A long time ago, you said you didn't pay attention really to the macro. That was discouraging to me as someone who likes the abstract and doesn't like to get his hands dirty. But I was watching one of your interviews recently. I thought I'd seen them all, but there's more coming out. You're basically disseminating knowledge faster than I can absorb it. And I think I got the answer to the question. And in the interview, you said that when you're right on a speculation, the prize is so large that it doesn't even really matter what's happening to the commodity price. And that to me explains why you can go ahead and not be affected so much by what's going on in the macro, whereas other investors, I mean, we see the macro basically moving the markets most of the time, and especially times in distress, all correlations going to almost 1, and the macro being the only thing that matters. Am I correct in this conclusion?
Well, I think there's two important facts that you bring up, Albert, and I congratulate you for continuing to think about these issues. The first thing is that in the junior mining stocks in particular, wealth is created not so much by the move in commodities, but rather by discovering the commodities or by answering unanswered questions. So you can have wonderful share price moves. I'm thinking back to things like Arequipa, which went from 30 cents to $30 in a flat gold price because they discovered so much high-grade gold. But the second reason why I follow the micro rather than the macro is because I don't have any durable competitive advantage in the macro. Everybody looks at the same numbers. Everybody has access to the same data. I do have the ability, because of experience, to understand that bear markets are the authors of bull markets and vice versa. But that knowledge isn't unique to me. What I do have sitting at Sprott is I have access to detailed fundamental research, financial research, engineering research, and geological research on the micro, information on the firm level. And occasionally, by focusing all of the talents of an organization the size of Sprott on a $200 million market cap question, we discover an answer before the rest of the world does, and that can be extremely profitable. So what I do in my investing practice is I try and emphasize my competitive strengths, and I don't compete particularly hard in places where the fight is a fair fight, like the macro.
Right. So hard knowledge in areas that matters. 40 plus years of experience at work here, and we have the Sprott conference coming up in July last year, leading up to the conference, you did a nice interview with Takoa about how to use a conference, how to attend a conference. And one of the things I've always enjoyed about your talks is that I can understand them, Rick. Oftentimes when you're talking to someone who is an expert in the field, especially someone who's been doing it for a very long time, they take so much for granted. It's like trying to learn to ski from a person who's skied since the age of 1. They just don't know how to explain things. Yet you, on the one hand, are an expert that's been in it your whole entire life, yet you can still talk to people like me who have to start from the beginning. And you break things down in a way that makes sense. So I really enjoyed that. Can you talk a little bit about how you've used conferences in the past?
Sure. Are you talking about how I specifically do it or how I've helped investors do it?
Yeah, no, how the proper way to do it. Just paraphrasing what basically you told Takoa last year on that video, which I'm going to link to here in the show description. I think it's worthwhile.
Yeah, if I'm going to talk about my conference in particular because I'm deeply familiar with it. The conference that we're going to throw in Vancouver this year will have 55 exhibitors, public company exhibitors. But what's important about those 55 public company exhibitors is that they are all owned in Sprott performance fee generating accounts. Now, that doesn't mean that every one of them is going to work. What it does mean is that we're familiar with each one of the exhibitors. At many investment conferences, the exhibitors are regarded as advertisers, meaning that if they have a pulse and a check that cashes, and by the way, those are in reverse orders of importance, that they're accepted on the floor. At the Sprott conferences, we've been told by our clients and attendees that the exhibitors are content too. So it's important to recognize the difference. That means that we have vetted whether we're right or wrong every single exhibitor. So we've done a bunch of work for people before they get to the conference. But when they get to the conference, interrogating the exhibitors is a bit of an art form. And there's a lot of information on the Sprott website, including the video that you mentioned, that talks about how to go about determining if for you a company is a good investment. And it's important to note that you get out of the process precisely what you put into it. We have argued with clients for years when they ask us how many stocks they should own, what should constitute a portfolio. I say the number of stocks that you're willing to spend an hour a month monitoring. And the same goes with regards to conferences. You will hear so many good stories at the conference. You will get so much information from so many spectacular speakers. You will have the ability at the coffee breaks and at the lunch breaks to talk to other attendees and other investors who know a lot. That really you're going to be subject to information overload, and understanding how you're going to allocate your time and allocate your capital by educating yourself to the process before you attend the conference guarantees that you will be more successful at the conference than you would otherwise be.
There are many aspects of the conference last year that I enjoyed, but one of the things which was a pleasant surprise and as a layperson was on one of the days, it must have been the first day, you did, I think, what you call the virtual tour of the exhibitor hall. And what I enjoyed about that is it was just kind of a peek into what it takes to be an investor in this industry. You, without any really visual aids, just went through off the top of your head all of the exhibitors, the key personnel, their histories, their successes, the price of their stock, gains. And I thought that was very impressive. And I got the same feeling speaking with the brokers at Sprott as well. It gives you an appreciation of what you call durable competitive advantage. How much time and effort that you can or that you really need to put into this process if you want to have an advantage over the field.
Oh, I think that's very accurate. We've tried to do precisely that for people at this conference. The reason that we do the virtual tour of the exhibit hall is that I have to help 700 attendees allocate their time among 55 exhibitors. And so I try and give a very brief overview of the attributes of the exhibitors so that the attendees have a reasonable choice in 2 or 3 hours a day over 4 days to maximize the value of the conference in terms of their time. our job in putting on a conference is to deliver to attendees, first of all, education and information, but second of all, direct opportunity by way of the exhibitors. Conversely, my job for the exhibitors is to present an audience of skillful, high-quality investors so that they can build the constituency, which is known as a shareholder base, to enable them to be successful over time. Attract investors whose interests and prejudices are aligned with the interests of the management team. And I found that taking an hour out of the conference to, in effect, facilitate that introduction saves everybody else literally hundreds of hours.
Yeah, no, it was very beneficial. Aside from the exhibitors, there are also a good number of featured speakers that are going to be this year. Can you just give a rundown of who we can expect to see?
Yeah, I'll tell you, I'm so proud of my speakers roster this year. We have a bunch of young, resource-oriented editors, mostly from the Agora world, who folks don't know and need to know. This younger crop is spectacular. Of course, our headliners are spectacular, too. We have Jim Rickards back. I'm embarrassed to say that last year at my own conference, he outpolled me as the best speaker. So although I was tempted by jealousy to delete him, instead we brought him back as keynote. But the real theme this year is living legends. We want to have people who are active in the business today, who have built very large companies successfully in the past. So we have Randy Smallwood back from Silver Wheaton. You know, he built this from a concept to a multi-billion-dollar streaming company. We have my dear friend Ross Beatty, who has made me look smart for 30 years coming back. We have Bob Quartermain. We have Rob McEwen. And, of course, we have Robert Friedland, probably the most successful mining financier of this epoch. So investors will have the ability to be schooled by gurus, be schooled by analysts, but they'll also have the chance to listen to these living legends talk about how they build companies, how they invest themselves as principals, what they're up to today. Many of them will hang around the conference and, in fact, go from booth to booth looking for investment opportunities themselves. Having the ability to trail Robert Friedland through the exhibit floor while he talks to companies and asks them about their drill holes is an experience that by itself is worth the cover charge for the conference.
Extraordinary, and I remember those speakers last year, and Mr. Smallwood I really enjoyed. James Rickards was a very good talk, as was yours, Rick. One thing about James Rickards is after the conference, after his talk, he was very patient, stayed for a very long time answering questions of just a huge crowd of people. So I really appreciated that. I expect he'll do the same again. Just a great speaker and a wonderful person to talk to.
Last year he came to the whole conference. He was there patiently taking notes through other people's talks. I mean, he's a really, truly wonderful human being, in addition to being extraordinarily knowledgeable, extraordinarily bright, and given that he beat me as best speaker, a pretty damn good speaker.
Yeah, no, he's a good speaker and knowledgeable in so many areas, and not ashamed to call himself a gold bug. That's what I enjoy. He's not someone you would typically associate, I think, with gold. He has many interests, but a lot of these people are coming around. A lot of the newsletter people are coming around now.
No, I think that's right. And importantly for Jim Rickards, he came out in favor of gold early last year when it was a very unpopular trade. Gold has a lot of newfound friends now that it's beginning to perform. But Rickards had the courage of his convictions 12 months before it was popular.
Right. A true friend, not an acquaintance. I think a lot of these people are just acquaintances. Okay, so that's the Sprott Vancouver Natural Resource Symposium. I'm going to be there. I highly encourage you to be there July 26th through 29th. I'm going to link to the sign-up website here in the description. You can still get the early bird price, so please do so as soon as possible. And Rick, I know we both want to mention that following your conference is Giant's Capitalism and Morality Conference. And one thing I really enjoy about that conference, apart from just the subject matter, is that you're there, Doug Casey's there, a bunch of people, Adrian Day's there, And it's much more of a relaxed atmosphere. Sometimes watching you work at the Sprott conference makes me tired. It's good to see everyone relax. And just, except for Jayant, I mentioned before, he unfortunately is working like a madman on that day. But everyone else is very relaxed, and it's a great place to get to know people and exchange ideas.
Yeah, I really look forward to Jayant's conference. It's one I do for fun. That isn't to say that I don't have a really good time at my conference, but as you say, it's 4 very intense days for me. Jayant's conference is not about money. It's more about life and liberty, which is something that I enjoy. But he always has a great speakers roster. He's been kind enough to include me for the last 7 years. I think the big added benefit this year is, first of all, it'll be a day and a half as opposed to just being a day. There's an extraordinary speakers roster. It's going to be pretty controversial. Doug Casey talking about why he hates charity. I'll be talking about the fact that corporate social opportunity is a scam, that we need to talk about corporate social responsibility, CSR, is a scam, that we need to talk about corporate social opportunity, and that making profits is evidence that one's duty to society has been fulfilled. After all this, there's going to be a great chance for everybody just plain to get together and relax. We're going to have a picnic, a good old-fashioned picnic after the conference where everybody's going to be sitting together. I'm going to be sitting personally with my dear friend Walter Block from 20 years, for whom I've taught, who has amazingly come out in favor of Donald Trump for president. I think that my friend Walter has a few things to answer for. And so the controversy will continue into the picnic.
Absolutely. I think I love Dr. Block. I think he's a little bit of a troublemaker, and I think he likes a good debate. And so he gets himself kind of like an intellectual Harry Houdini. He likes to tie himself up in an impossible situation and see if he can get out, and often he does.
Well, my temptation, speaking of tying him up, is to come with a piece of rope fashioned in a hangman's noose. Perhaps as an engineer you can help me effect that knot. It'll be an interesting discussion.
All right, Rick, thank you again so much for joining me, and I look forward to doing this again and seeing you in Vancouver.
Thank you so much.
I've been speaking with Rick Rule of Sprott US Holdings. If you want to check out his website, go to sprottglobal.com. And don't forget to visit powermarket.com for insightful interviews with the world's leading experts in economics, finance, and investing. Till next time, take care.